We are back at it again here with another video with the Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return is for you to smash that like button, tell me know you watch this video, helps out the YouTube channel, and lets me know you appreciate the time and effort I put into making these videos. So here we are with ATR, and ATR is actually sitting sideways after building some strength from yesterday's low, moving upwards and now consolidating. We're going to look at it based off 42 vision, right, on 30-minute time frames and the 1 day, as well as all the data with the short interest and what's going on with this stock moving forward. But before we do, I want to share with you guys the home run opportunities that I mentioned this morning, and this is what we strive for every single day, and it was a great way to start off the month of October, and we're going to continue to strive for opportunities like those, and we're going to jump right into it here with ATR. So the home runs of the day were spectacular despite the fact that the S&P 500 index continues to struggle to get back to all-time highs, but I will continue to look for opportunities like these every single day, and that's what we strive for over at the Invest for Tomorrow community. And if that's something that interests you and you want to become part of, you're more than welcome to join us. I would like to invite you to join us. The link is down below in the description to the Discord, and by joining, you'll become part of a growing community of investors all looking to learn and grow together. So the stocks I mentioned this morning were BMRA, PALT, and GROM. This was our worst performer, giving small jumps of 3 to 5%, 5 to 10%. But let's go ahead and look at these charts here of these home runs. So PALT was one of our home runs yesterday. Mentioned it in the pre-market when it was sitting sideways, started to move up, dipped after the bell, and took off to a highest point from the moment that I mentioned it of 20% plus. Now our other home run opportunity turned out to be a 20% plus move as well, but it was a little bit different, and this is BMRA. It was starting to move upwards towards the bell, and it was just going constantly downwards, but it had pops of 3 to 5%, 5 to 10%, about 3 times here before hitting a bottom and reversing, giving an opportunity of a highest point of 20% plus, guys. And this is something you can become part of as well. Check out the link down below in the description to the Discord, and we look forward to having you join us. Now, a lot of people have been asking questions on 42 vision and what it is. I do chart analysis with it, and it's an indicator that you can gain access to by joining the 42 vision tier level. And what it does is bring clarity for me in the charts, right? I could see the dips and I could see the rips, right? And right there where there's weakness and where there's strength, to be able to see the 5 to 10%, 10 to 20% moves, no matter what chart it is and no matter what time frame it is, right? This is based off the 1 minute. On the 5 minute, you could see it, 15, 30 minute, whatever it is that you're looking for, but it allows me to see when things are overextending, going into that shift of weakness and shifting back up to momentum. And that's how I'm able to catch the dips, ride the rips, and avoid those dips that look like a possible dip opportunity and turn out to be the dip of the dip of the dip. And then right there is the reversal again, and you can see the strength based off the 1 minute, the 5 minute, and it allows me to be able to see the 5 to 10% moves, 10 to 20%, and 20% plus moves as well. So if that's something that interests you and you're trying to be able to gain more clarity of what goes on in the charts, quiet down the noise, and be able to focus on maximizing opportunities, you may want to check it out. Let's jump into these charts. Here we are with ATR, and ATR has actually been pulling downwards back towards that bottom that it bounced off of. So we have a few things to look at here with the data, the 1 day, the 30 minute, and as I stated earlier in the video, what 42 vision is, this is a clear picture of it, being able to see the weakness, the transition of strength, and how things are looking right now. It is transitioning back into weakness, but we have a point to look at. And then if you look at it on the 1 day, which is what we're going to look at as well, you could see here, right, that there's still some strength here on the 1 day. It's trying to reverse here. If this could pick up or sit sideways and then pick back up like we saw before here, this transition from red with dark green to green with dark green and go over to green, there will be some strength here in the chart, and we'll have to look at the resistance levels of $14 and up here at $17 for this to continue, right? That's what the bulls want to break through to put pressure on the shorts and the bears. Now, we've talked about what the bulls need to do and how this needs to play out for the bears to stay as bulls and get forced to not cover again, because what they're doing, since the days to cover is so low, is they're covering and then they're reshorting the stock all over again. Now you could see here how that's taking effect, because It's pulling it back down, but they are not having enough strength anymore because the days to cover is going higher. We have some data to look at here, and you could see that this has moved up from down here at 912, bounced up to highs here of 1176, and it's staying within a channel here. So if it can consolidate and the bulls continue to hold up or push it back up and create that staircase effect, they could force shorts to cover, and the closer this gets to $14, that will be a pivotal moment for ATR. So right here with the short squeeze score, it is the number one. It went up from 95 now to 96.74. Borrow fee rate is 81, and we have here the days to cover coming up and nearly doubled, right, in the last week. So it's 0.23 now, and short interest is 21%. It keeps on going lower. Now, a lot of people are referring to this picture here, right, of what Ortex is saying. And yes, there is a free float on loan of 89. On loan is 17, right? And we're talking about millions. And this right here is a percentage. But at the end of the day, even though one is more updated than the other, the charts don't lie. And that's what we really focus on. And we want the days to cover to keep on going higher. The fact that this is going higher, that is a good sign, because the shorts are going to get trapped, and eventually they don't have the flexibility that they've been taking advantage of right here from this point down to here. Because what they're doing is they cover, then they reshort it, they cover, and then they reshort it, right? And that's what's been putting that pressure downwards. And lately, because the days to cover went up, you could see here how some of them covered and they haven't been able to completely reshort it due to the fact of the pressure of it going higher and not allowing the stock to just continue to lose that momentum. So right now, yes, it needs to hold up above certain levels, and that's 1020, break through this point up here of 1175. But the key factor is for this to break through $14. We've talked about why. I've stated it plenty of times. But let's look here how we know that they're covering. Well, the short share availability, 150,000. That was in the 10,000s, 30,000s in the last several videos and last several days. Last update 8 minutes ago, 150. Another thing too is the short share volume per day has gone down. Okay, that's another sign that there's less shorts getting involved. The borrow fee rate, they don't like it. The days to cover, they don't like it. And that's taking away the flexibility that they had. And you can see it in the chart because the chart has held itself up from that bounce. What we want to see though is for this bounce to consolidate, stay above those lows that we saw in the 9s. We definitely want to stay above that support level for this to have some strength and to create a staircase effect where the bulls force the shorts to continue to cover and stay stuck going from a bear and a short to a bull. I think that is like one of the biggest things that will give leverage to the bulls and to this chart to create a possible short squeeze. Now, another thing too, days to cover is putting more pressure on shorts, not giving them the flexibility, but does not mean that it could just run up like we saw before, right? The short shares and the days to cover is a lot different right now. The data is a lot different, and also the price per share is a lot different, right? When it started way back here, it was a lot more impressive how fast it would run, came down, ran up really fast, came down, nearly doubled. So for it to be able to reach those highs, I'm not saying it's impossible, but the short shares and the days to cover and the interest as well, short interest overall, is a lot different now than what it was before, and then the price per share as well. So all those things come into play. This is a whole different short squeeze opportunity, and it's not something to sit around and hope that it goes up 100%, 200% like it did before. It's very, very different. It's in the middle of the battleground, but still one of those with the highest short squeeze score and possible opportunity to squeeze. As always, guys, thank you guys so much for watching, and let's make some money.